Master in Boston, in for Emily Chang. This is Bloomberg Technology. Coming up in the next hour, we're looking at the best that Boston's burgeoning tech hub has to offer. From stalwarts to startups, we discuss what's on the cutting edge in some of the city's biggest industries. And today our focus is on the environment, which brings us to where we're at, the Rose Kennedy Greenway. We will find out how this innovative park all came together. Plus, we've got to talk about Pinterest reporting earnings results its first as a public company, and investors don't like what they're hearing. And as Facebook fights to ease controversies around the world, we'll hear from their VP of Europe, Nicola Mendelsohn. But today we're live from the Rose Kennedy Greenway. It's a 1.5 mile stretch of parks in the heart of Boston. Now, the linear park was born out of Boston's Big Dig. It's a mega construction project happened years ago to replace the city's elevated freeway with an underground tunnel system. Well, now it brings contemporary art and innovation to the city through a series of free public exhibits. And today it's launching a new exhibit. It's called the Auto Show, which uses augmented reality to explore themes of transportation. And joining us to talk about it, and the Greenway Conservancy's Executive Director, Jesse Brackenbury, and Public Art Curator, Lucas Cowan. Nice to have you here with us.
Thank you.
Or nice to have, thank you for inviting us.
Of course.
Jesse, let's start with you. Talk to us a little bit about this space and how it was conceived and how you guys use it.
Yeah, so this used to be an elevated highway right where we're sitting that cut off the city from its waterfront, and through the Big Dig, one of the biggest infrastructure projects in U.S. history, that elevated highway was put in a tunnel underground, and the 17-acre park, 1.5 miles from Chinatown, past most of the major tourist destinations in Boston, and ending in the North End, is the park we're sitting in now.
It's kind of amazing. A member of our crew was talking about how this used to be elevated highways, very different from what it is today.
Absolutely. And before that, a city that they blew through to put that highway there.
Tell me how it kind of fits into Boston as a city.
Yeah, so, I mean, we are right next to the aquarium. We're right next to Faneuil Hall. We sit between the financial district and the new Seaport district, where through the Big Dig, a tremendous amount of real estate development has occurred. So it's the crossroads of many things in Boston.
And we're going to talk about how it's used. But Lucas, I want to bring you into this picture because technology innovation is so much about the core of Boston, or at Boston's core, if you will. And you guys are incorporating that into the Greenway as well.
Most definitely. As you mentioned before, the augmented reality exhibition that we just launched this past week is really paying homage to the history of a transportation corridor that we once were and are still currently, but really using historical imagery and contemporary imagery to imagine what the future of this space can be.
So tell us a little bit about how this exhibit works. So it does use augmented reality. So if somebody goes to the exhibit, what exactly will they see?
So when you come to the Greenway, you're going to see a series of cubes that go through the 1.5 mile park system, and each of those cubes kind of delineate an area where augmented reality exists. So there's 16 different locations. 10 of those locations are historic images that date back to about 1902 to about 2003, and 6 of those are actually contemporary images. By downloading an app called Hoverlay and hitting the Greenway channel, you're able to walk through space and see the Greenway in a whole new way.
It's really fascinating to be in this space because it feels like it's in the heart of everything that's going around. And you guys use it, right? The community uses it in a lot of different ways, Jesse.
Yeah, we have 450 free events, concerts, and 100 free fitness classes and markets. And we're right across the street from the Trillium Beer Garden and just down the block from the Carousel and from the City Winery. It's a space with a lot of diverse activation.
The beer garden getting a lot of attention at this hour.
Yes.
But I do think about green space in terms of urban development, and you do find that cities are thinking it's thoughtful in terms of how they want to certainly build buildings, but also think about the open space, and you're seeing that here.
Absolutely. I mean, Boston is doing very well, and buildings are going up all around us. New residences downtown, and it is the kind of sustainable, transit-oriented density that you like to see in cities. And the new building right across the street from us, part of their marketing slogan when they went up was, "This is a 17-acre front yard that you don't have to mow."
Which is kind of nice.
Yeah.
Lucas, I want to bring you back into this because I think one of the things I love, especially when I'm looking at art, is I love doing it out in nature.
Yes.
And I just think there's something happens when you throw works of art out in the elements. They just come to life. Tell me about having this space to work at. I know you've got the augmented reality, but you've got to think about different applications.
Oh, most definitely. I mean, I think the beautiful thing about our program, which is all temporary and contemporary works in space, is that you may live or work or move through the space on a daily commute, but every time we put up a new piece of public art, you're able to kind of reimagine the space that you're in and understand it differently or question the space you're in. So on top of the augmented reality this year, we have a series of exhibitions and installations that will be coming that are dealing with automotive and transportation and direction and movement. So really it's kind of a look back to what was here and where we are going in the future.
Tell me a little bit about the type of people who are coming. I'm assuming it's the Boston community, but you have a lot of out-of-towners that come. I mean, give me an idea of the flow.
Because it's a 1.5 mile long park, you have very different kinds of audiences in different places. So next to Faneuil Hall in the aquarium,
here, right?
Right. You have tourists, and in the financial district, you have people commuting every day. In Chinatown in the North End, you have residents who are using it as their neighborhood park.
One thing I've got to ask both of you about, and something that's near and dear to us, is the July 4th celebration.
Oh, yes.
And I'm going to be co-hosting with Alex Steele over at the off the Charles River at the Hatch. But you guys also do the July 4th here.
Yeah, right here, in fact. It will be simulcast, and there's a big screen, and instead of the crowds of the Esplanade, you can pull up a chair on our organically maintained lawns and watch it right here across the street from the beer garden, right near the beautiful Roseworth Arch. It's a great place.
It's another place for people to enjoy it. I know our Janet Wu will be here also from Bloomberg.
Yes.
Guys, thank you so much. Really appreciate it. That's Jesse Brackenbury and Lucas Cowan. Thank you so much for joining us.
Thank you
really
for our
appreciate it. Well, the toast of the town, how Boston-based Toast is using technology to really reimagine how to run your restaurant. That's coming up next. And if you like Bloomberg News, do check us out on the radio. You can listen to us on the Bloomberg app, Bloomberg.com, and in the U.S. on Sirius XM. This is Bloomberg. Welcome back to Bloomberg Technology Live in Boston. I'm Carol Masser. Well, all week long, we have been highlighting the innovation that's taking place in this city. It's a city that, according to Crunchbase, through August of last year, saw its total venture investment overtake its heated rival to the south. We're talking about New York City. Now, the numbers coming in at $5.2 billion to $4.5 billion, respectively. And our next guest is tapping into that money. Chris Comparato is the CEO of Toast. It's a leading all-in-one point-of-sale restaurant management platform, and the company just raised $250 million last month, bringing the company's valuation to a whopping $2.7 billion. Congratulations.
Thank you.
That's nice to know. How are you?
I'm doing great. It's good to see you.
It's good to see you again, and it's a couple years. You reminded us.
It's been 2 years.
Yeah. So tell me what's happened in 2 years, and that's a nice capital raise. What are you going to do with the money?
We're going to do a lot with the money. It's a nice capital raise. We've been busy over the course of the past 2 years. We're really trying to affect a lot of change across the restaurant community, and we're enabling this, what we call this new era of hospitality. So we're investing heavily in R&D.
So talk to me about the R&D. What specifically are you looking to do? Because you've got a platform already established. You've got a bunch of services.
Sure.
What else do you want to do with it?
Yes, we look at all of the stakeholders. We look at the guest, we look at the employee, and we look at the owner, manager, operator, and we're trying to affect change across that whole spectrum. So a good example is, how do you get orders into the restaurant?
Right.
So in today's consumer personalization and convenience environment, how does the restaurant get orders in? Whether it's a tool like Toast Takeout, which we piloted in Boston, which allows you to do mobile order ahead with your phone, or if it's kiosk, or if it's online ordering, or if it's a device called the Toast Go, which we released last year, that allows the wait staff to take orders at the table and turn tables faster.
And that's what it's all about, Chris, right? In other words, more customers in, more tables being turned means more revenue for the restaurant owner and more more tips for the workers.
Yeah, so I'd say it's two things. It's all about more revenue in the door and then operational efficiency.
Well, listen, you were founded back in 2011, and I do wonder, nice capital raise, but where's it all going? So you've been around 8-9 years. You've got to be thinking, is this the time to take the company public?
Yeah, so this is a massive opportunity, and the restaurant community is a massive market. So we're
untapped market in your view?
Yeah, untapped, and we're in the early days of a major transformation across the entire industry. So for us, in many ways, we're still getting started because we're making massive investments in R&D across the whole spectrum.
So you don't feel the pressure to do that, to go public?
No
well, it's
pressure.
interesting. The reason I guess I ask is, we've been focused on a couple of stories, Chris, this week. Obviously, U.S.-China trade, but more important and maybe pertinent to you is I think about some of the IPOs that have come to market.
Sure.
And these are companies, as you well know, that have been around for a decade, like Uber.
Yeah.
It didn't go so well. And I do wonder if you think about, how long do we stay private before we go public?
Sure. So first and foremost, we're happy being private and putting investments to pilots and R&D and really breaking through to the future for the restaurant community. I've had a lot of friends who have gone public recently, and we're in no rush. I think it's a milestone. We're after building long-term shareholder value.
Right.
So when we look at the opportunity for us, it's to build a pillar company in Boston for the restaurant community that builds long-term investor value.
As you said, it was a very untapped market in terms of the restaurant space. I know you guys don't like to give out numbers in terms of specific customers, but give me an idea of the growth rate in terms of bringing in new customers.
Yeah, we're growing north of 100% year over year. We've got
in terms of the customer base?
Yeah, in terms
revenues?
of the customer base, both.
Yeah. Wow.
But then we've got over 1,500 employees. I think since we last met, we've probably added 1,000 employees in the past couple of years.
Right.
And
not just in the U.S. You guys are in Dublin. You're elsewhere.
So we have an engineering center in Dublin, but we're still U.S. based in terms of the restaurants that we serve. So we serve restaurants across the U.S., whether it's an enterprise like Jamba Juice or nationally acclaimed restaurant operators like Danny Meyer and Jose Andres. So we're all over the U.S. in 30 markets, and but it's still the early days.
Well, and I do wonder, okay, going public aside, what about other partnerships? I know you've been working with U.S. Foods, and I do wonder what other avenues, because that's more food distribution.
Sure.
So where else can you go, or where else do you hope to go?
So we look at the entire restaurant value chain, and we're trying to make their lives better. It's hard to run a restaurant. So this week, on Tuesday, we announced Toast Payroll and Team Management because a lot of restaurant operators are spending hours doing payroll every Friday. And if we can give them their Fridays back and streamline payroll so that they can get hours back on efficiency to spend more time with guests, that's what we're doing. So we launched that this week, which is an exciting new venture for us. And we're going to continue to innovate across the entire restaurant value chain.
So back office, front office, whatever it is.
Front office, back office, supply chain, whatever it is.
So I do wonder, and I'm sure you've done this, I Googled Toast and it's like competitors, and there's a lot out there, and there's a lot even in the Boston area. I mean, there's something about the Boston city, the tech scene, the innovation scene, the restaurant space, that there's a lot happening here. So how do you see the competition? Is it folks that you might ultimately partner up with? Or, I don't know, how do you see it?
I mean, there's areas where we build, there's areas where we partner, and I think it's a space that's dynamically changing.
Yeah.
At the end of the day, we want to help transform the community and move the community forward, and the Boston market's tremendous. It's sort of two sides of the market. You've got this amazing supply chain of talent with MIT, BU, UMass, Harvard, plenty of talent, and then you've got on the other side of the market these companies that are transforming industries like Wayfair, Car Gurus, HubSpot, Toast. So it's an amazing market for us to thrive in, and then it's an awesome restaurant community.
So you mentioned about what a great city to be in terms of tapping into talent. What about in terms of what you guys are doing? What does it mean in terms of replacing workers? Or how do you see that working?
Yeah, no, it's interesting. We feel like we're enabling the community to thrive, and a lot of the restaurants that are running Toast are adding workforce because we're making their jobs easier. They could spend more time with guests, more time cooking, more time managing the operation. So we see a lot of restaurants that are thriving and adding labor, and we're trying to make it easier for them.
Just 10 seconds, international expansion, that's in the works too?
At some point, but not anytime soon, but at some point.
All right, well, good to catch up with you. Let's not wait 2 years.
Yeah, absolutely.
and
Thank
find
you,
out
Carol.
what's going on. Chris, thank you.
Thank you.
Chris Comparato, he's, of course, the CEO of Toast. Well, coming up, everyone, we're going to talk about Pinterest reporting their earnings for the first time as a publicly held company. We'll look into the numbers, the market reaction. Investors didn't like what they heard from the company. That's coming up next. This is Bloomberg. Well, welcome back to Bloomberg Technology, live in Boston. I'm Carol Masser. In Paris this week, Facebook and Twitter joined the leaders of France, New Zealand, and a slew of other countries in pledging to curb that online scourge. Now, Bloomberg's Francine Lacroix sat down with Facebook Vice President for EMEA, Nicolas Mendelsohn, in London.
I don't know why a company should be broken up because it's popular. I think what we're really getting here today is the issues around what are the issues facing the internet, what are the problems of the internet. And actually, if you look, we've made a huge amount of investment in the areas of safety, in the areas of privacy, in the areas of election interference. And actually, through those investments that we've actually made, we're able to work through our different platforms. And if there is a bad activity happens, we can flush it through. Now, we don't think we're perfect. We think there's more that we can do, but we think we're making good progress in these areas.
Do you think regulators understand you and understand exactly what the internet is?
Yeah, I do think that regulators do this, but we've also been very clear when it comes to regulators. We want to work more actively with them around the world. We've been very clear about that. Mark Zuckerberg was just in Paris last week working with the French government and reviewing with President Macron the work that we've been doing together around hate speech on the internet and content regulation and sharing both what we're doing and what more we can do. And I think that's a really good model that we would like to see more of around the world.
Mark Zuckerberg will testify in the UK one day or not?
I don't know if Mark will come. He's not been asked to testify. He's been asked to come here and visit here, but he doesn't have any plans at the moment to come to the UK.
You've done quite a lot of work in trying to make sure that there wasn't interference with elections. We're 2 weeks away from the European elections. Have you seen any signs of people trying to interfere?
No, we haven't seen any signs specifically, but what we've also been doing is putting a lot of work in place to make sure that we can really protect the integrity of the European elections. So what does that mean? Any political advertiser or any party that wants to put out issue-based ads around politics actually first has to register, say where they're from. And what that will mean is that any ad that they put out will actually say paid for by on any one of those adverts. Now, once that ad is run, it will actually then live in an ads library that we put up that anyone, you and I, can just go in and we can literally see what those ads are, who was targeting them at you and why, and where the location was. And they'll be there for 7 years. Now, that's not just for political advertising, that's all advertising. And there's never been that transparency of advertising politically anywhere before. And so we're pleased with the progress we're making there. We'll have weekly lists where you'll be able to see who the top spenders are. But we also want to continue to be working with governments with regulators in this area as well, in order that we can continue to protect those elections.
So what elements of GDPR are working and which ones aren't?
No, so I mean, when we brought in the GDPR, when it was brought in, it was one of the biggest cross-functional activities that we had seen as a company. And I'm really pleased to say that people really got involved with it. They did the privacy checkups, that they got involved, and actually we've seen that it's working really well. And actually we think this is a really good thing. So we've actually rolled it out around the world into different places, all the parts that weren't specific to Europe, but actually the checks and places that we put in place.
But do you think GDPR will actually be a roadmap also for US regulation?
Yeah, well, it is regulation, so we are regulated as a result. And as I say, I think it's a good thing.
But will US regulation will the US force other companies to do the same in the US?
I can't say what US regulators are going to do.
To what extent does bringing end-to-end encryption in certain Facebook platforms actually make it more difficult to control harmful content?
Yeah, so this is a challenge, but Mark's been very clear that we see where the direction of the company's going is much more towards privacy centricity. Why are we doing that? Because actually people are telling us that that's what they want. You know, the last 15 years of Facebook has all been about people publicly sharing, if you like, Mark talked about it as the town square, where people would go out and talk to many. But we also see that people need a place, like they do in real life, in their own homes, where you just need to be a bit quieter, the living room. And so we're creating products for both. Now, one doesn't mean the absence of another. You need both here together. But that's something we're committed to working on, but we've declared where we're going, and it's going to take us time then to fulfill that.
And that was Facebook Vice President for EMEA, Nicola Mendelsohn. Well, let's get to a company that's definitely seen a pretty big run up. We're talking about a more than 60% surge since it went public back in April. We're talking, of course, about Pinterest, which just reported its first post-IPO earnings release. And the reaction on Wall Street isn't as good. We've seen shares tumbling as much as 20%, right now down about 16% as we speak. Let's head out to San Francisco, where Bloomberg Intelligence senior analyst Jitendra Worrell is standing by. Jitendra, is this all about the forecast, its outlook in terms of sales for the year?
Yeah, I mean, the earnings were mixed in a way. User growth was strong, actually, stronger than what the expectations were. But the guidance sort of reflects their stage that Pinterest is in right now to scale their revenues. You know, they're investing in self-service advertising, they're investing in international growth. So they're priming the pump, if you may, to sort of like accelerate sales in 2020. So 2019 will be an investment year. But having said that, you know, the reaction that you're seeing in the market is more of a function of valuation and less of a function of something's wrong with Pinterest. You know, we don't think Pinterest's long-term fundamental story has changed. But if you look at the valuation, you know, 16 times FY19 sales, there was a high number given where they are right now in terms of self-serve advertising and the expansion plans.
Yeah, it's kind of been an interesting week, right? We had the Wall Street community also weighing in on the stock, and some of them who even maybe were involved in the offering kind of pulling back their thoughts on the company. And basically, it's that valuation story at this point. Longer term, though, they're still pretty bullish.
If you look at the expectation for the next couple of years, it's pretty strong. I think for this year, what you're going to see is because Pinterest relies on, you know, a few large advertisers right now, and they're just opening up their platform for self-serve and small businesses. So a cycle that, you know, even Snap went through, for that matter. You would see them like transitioning through the cycle of, like I said, priming the pump so that they can actually get more advertisers on the platform and then drive revenues. So the hope is that 2020 is when these things that they are investing in right now will kick in. But you know, this year, I think expectations are pretty much in line with, you know, what the market was or what the consensus were really seeing.
I mean, Jitendra, as you do your analysis on this company, I mean, some of the Wall Street community says that this is a company that ultimately will be competing with the likes of Facebook or Alphabet or Google or also Twitter in terms of the advertising platform. Do you see it that way as well?
I think it's best if Pinterest sort of like capitalizes on its niche. You know, it's a visual discovery platform. People are there to identify what products they would want to buy. And I think retailers would have a lot of interest. They have interest, but Pinterest doesn't have avenues right now to scale that very quickly. Right now, they have to rely on the sales force. They have to hire more people to drive revenues. But that'll change as we go through this investment year, as they call it. As self-serve advertising opens up more, you will see revenue growth come back again.
All right, going to leave it on that. Jitendra Worrell of Bloomberg, thank you so much. Coming up, everybody, we're going to talk about how does a city like Boston prevent the catastrophic impact of climate change. We'll talk to a top advisor on that topic. That's coming up next, and this is Bloomberg. This is Bloomberg Technology from Boston's Rose Kennedy Greenway. I'm Carol Masser. Boston is definitely a city famous for igniting a revolution and is once again leading the way now as a tech and innovation center. Well, the new Bloomberg State Innovation Survey finds Massachusetts as the second most innovative place for business in the country, and Boston is the primary driver of that new reality. From venture capital funding to academic brainpower, Boston is undergoing a revolution into its economic future.
Boston, a city that knows a thing or two about revolution, is undergoing a new one, an innovation revolution. Boston tech is booming, powering Massachusetts to the second highest spot in the nation on Bloomberg's State Innovation Index, based on factors including the region's research and development and education levels and its number of tech companies.
Its score was really high, and much of that was led by the Boston area, which is a big tech hub. It has many top graduate programs, undergraduate programs for science and engineering degree holders. It also has a high tech company density as well as robust venture capital investment.
On tech density alone, the Bloomberg Index ranked the state number 1. More than 60% of all publicly traded companies there are classified as high tech.
One of the main reasons why Massachusetts ranked so high was because of the tech company density that it has in the state, and a lot of that is led by the Boston region. If you think of some of the top S&P 500 companies, you have Biogen, Raytheon, General Electric, all of those are in Massachusetts, some of them in Boston.
That tech density is no accident given the Boston Brain Burst, which includes 70 top science graduate programs in an area where 49% of adults have college degrees, 40% of which are in science or engineering. Statewide, there are now more than 1.3 million jobs in the innovation economy, an 8.6% jump since 2012. A Beantown boost in venture capital investment has helped fuel that job growth. In 2018, VC firms invested $11.6 billion in Boston area companies, an increase of 126% in 6 years. Amazon's $800 million purchase of the Somerville-based online pharmacy PillPack was a coming-out party of sorts for the area's startup sector, and a shot heard round the country in Boston's new innovation revolution.
And as Boston and other cities grow in leaps and bounds, many leaders are focusing on the impact on the environment. Jesse Keenan has previously advised governments, agencies, and major companies on this exact issue. He's now a professor at the Harvard Graduate School of Design, and earlier this week, we caught up with him. Keenan and I discussed how climate change impacts the financial world.
It is going to have significant impacts across multiple sectors. If you believe the general economics literature that has been proliferated in the past 20 years, most of the growth that we will have in our global economy will be evaporated by climate change impacts or the costs associated with those impacts. So as a growth function in our broader global economy, it's quite real.
Say that again. So you're saying that most of the growth that our economy, that we've gotten used to, that will be wiped away?
So if we think of 3 to 4% growth in our economy, that will be evaporated immediately in the face of the costs associated with climate change.
So how do investors kind of need to start rethinking how they look at assets?
Well, you're already seeing this in terms of institutional investors that really do think long-term on the going in and on their exit strategies as well. But I think over time what we're seeing is moving out of the core ag, food, water, infrastructure.
The obvious, right?
The obvious sectors. We're starting to see people thinking in the long term in terms of automotive and thinking in the consumers. And this isn't just a change in consumer preferences. This is actually a reflection of the product cycles and also the supply chains, right? So the supply chain impairment associated with this is significant, and that's really putting downward pressure on a lot of growth and a lot of market share as well.
You've partnered with a lot of companies. You've partnered with Goldman Sachs, Google, Lennar Foundation, Housing, the White House, and more. So what's the kind of work that you do with them? What are the kind of questions they want answered?
Well, our work is varied across the board, thinking about housing, thinking about demand, thinking about where people are moving, thinking about a lot of different strategic drivers that are opportunities for value add that really advance a sustainable urban development and a sustainable lifestyle in many ways. Now, we can't consume our way out of climate change. The cost will be much greater than that. We have to think about the critical aspects of infrastructure delivery, healthcare delivery, transportation, all of these things that we have defined our standard of living. They're all up for grabs in being redefined in the face of climate change.
Do we have a dollar amount in terms of what this is going to cost for us to kind of adjust our society to meet the demands of climate change?
It depends on how sensitive the climate system is. It ranges in the order of tens of billions of dollars annually for municipal costs.
And you're
all
talking
the way
U.S. numbers, I'm assuming.
U.S.
You're not talking
numbers,
global.
Yeah, just in the United States, up to the order, again, 4%, 5%, 6% of our GDP.
Are we ready to make the necessary changes? Do we even have an idea of what we're going to have to change in terms of changing borders, changing supply chains? We're not even close.
We're getting there. I think that the United States is in a superior advantage by many circumstances because we have a lot of disasters. We have a lot of history of disasters compared to many other countries. So we're beginning to think about how climate change is both a shock and a stress. But on the shock end of the equation, we have a fair amount of experience. What's happening now is a lot of technology in giving us the ongoing intelligence. So we have institutional drivers, we have laws, we have regulations, we know how to recover. The question is, how are we going to build in resilience and adaptive capacity within our economic sectors and systems to be able to really respond to climate change and really take advantage of the opportunity associated with climate change, because it isn't just managing risk, there's real upside to climate change as well.
Well, what are the opportunities? Because I think about it from an investment perspective.
Well, there's going to be whole new asset classes. A lot of people look at credit enhancement products within the muni market as a really great example of this. We tend to think of fairly conventional risk transfer mechanisms within insurance and reinsurance, but there's a whole new set of products out there. There's a whole new set of insurable assets or uninsurable assets, depending on how you look at it. And I think in many ways that's one of many examples of opportunity in terms of market growth.
One last question. When you think about cities, whether it's San Francisco, whether it's Boston, here we are in Boston, whether it's New York, right, all on the water, I mean, will they be dramatically different in terms of climate adaptation maneuvers that they're going to have to take?
Absolutely. And I think you have to view these cities as part of the metropolitan region. When you think about competitive economies and you think about the affordability, the accessibility, even degrees of authenticity of these places, we have to think not just Boston's relatively small. It's less than 1 million people live in Boston. It's Somerville. It's here we are in Cambridge. It's a number of different areas, including as well in the Bay. They need to start thinking as metropolitan units in terms of governance, but also the investments it's going to take to scale beyond these jurisdictional borders.
That was Jesse Keenan with the Harvard Graduate School of Design. Coming up next, impact investing definitely taking the world by storm. And as more companies focus on social responsibility, which ones actually make the cut? We'll talk about that. That's coming up next. And this is Bloomberg. Welcome back to Bloomberg Technology, live from Boston's Rose Kennedy Greenway. I'm Carol Masser. Well, mainstream investors across the globe are increasingly shifting their focus to a new investment strategy. We're talking about impact investing. Now, the strategy is aimed at supporting companies and promoting social and environmental change, as well as financial returns. Now, according to the Global Impact Investing Network, there are over $502 billion in impact assets under management worldwide. One of the leaders in this space is Boston-based Arjuna Capital, which empowers clients to align their investments with environmental, social, and governance factors, ESG. And joining us right now to talk about it is Arjuna Capital's managing partner, Natasha Lamb. Great to have you here with us.
So nice to be here. Thanks for having me.
I love this space, but I think one of the things that's interesting we're trying to figure out is how do you define ESG? I mean, the criteria is different, right, among different investment firms potentially.
Yeah, and I think, there's different levels of commitment.
Right.
But really what it's about is opening the aperture. So instead of simply looking at the financial metrics, the accounting metrics, looking at the environmental metrics, the social metrics, the governance metrics, and whether companies are managing those risks and opportunities well. In part, it's a sign as to whether the company in general is well managed.
Right.
But it can be,
because it goes to the top leadership, right?
Absolutely.
On these issues.
Absolutely, and it can give you real insight as an investor as to what risks may be down the road. I think we've been quite prescient on some risks, like those facing Facebook, going back to December of 2016.
Right.
So it's really about that wide view. The other piece that it's about is what it's not just what aren't you investing in, because I think for a lot of investors that don't want to be in things like tobacco, nuclear weapons, or big oil companies.
Kind of very obvious, right? To some extent.
Very obvious. But then there's what kinds of companies do you want to invest in? And right now, impact investors are looking at the Sustainable Development Goals and trying to align their investments with those goals and what companies are commercializing solutions to our greatest sustainability challenges.
And doing that type of investing, Natasha, I think at one point it was thought that you had to kind of trade off returns. You don't anymore.
No, this is not a concessionary approach to investing and return. It's really actually about identifying these risks and opportunities so that you have a long-term tailwind to performance.
So tell us about some of the specific companies, because Facebook, you have certainly been out there front and center in terms of some of your concerns about this company. And one of the things is that you think that Mark Zuckerberg has too much of the power of the company, right?
That's right. So we've been engaging with Facebook for 3 years, since December of 2016, and asking them to address things like election interference, content governance, really the woes that we're seeing on the platform, privacy concerns. And with Mark Zuckerberg in this role as chairman of the board, CEO, and the company's most powerful shareholder, he just has too much control. And it's really important that to recognize that Zuckerberg alone cannot fix Facebook. There needs to be a diversity of views that's present.
Well, it's interesting. I mean, do you see any signs? I mean, they certainly have been out there looking to make some changes in terms of some of the information on their sites and privacy concerns. Do you feel like they're starting to take steps in the right direction?
I think they are. I mean, those are the steps we've been pressing for all of this time, and you're starting to see it. The question is whether that extra transparency, and I don't think it's full transparency, is actually addressing the underlying issues. And with a platform at such a scale with 2.4 billion users, you know, I don't think they can manage it.
Where do you think regulators should be in on all of this? And I think about the structure where you do have either a co-founder or a head of a company able to really consolidate so much power, certainly voting power, when it comes to a public company. Where should the SEC be? Where should the regulators be on this kind of structure? Because sometimes it works. Sometimes it doesn't.
Yeah, and I mean, honestly, I fault the investors for letting it happen in the first place, in terms of, you know, when the company does go public and accepting those terms, because it's simply, you know, it's simply good governance 101. This doesn't work, and we see the outcomes, particularly in the case of Facebook.
Talk to us about some of the other companies. I think about proxy season coming up, and there's a lot of folks that'll put out some issues when it comes to companies. ExxonMobil was one we started talking about before we got going. What would you like to see in terms of ExxonMobil doing differently?
Sure. So, you know, one of the things that we focus on is fossil fuel-free investing, and we have fossil fuel-free investments across asset classes, but we do have shareholders, investors that hold stock in Exxon and have held it for a long time and are very concerned about the direction of ExxonMobil. We have a proposal going to a vote at the end of the month asking the company to actually form a board-level committee on climate change, because we think that the steps that they're taking are not enough, that the company is facing an existential crisis to its business in climate change, and they're really not pivoting in the way that they should. And so we think, again, kind of going to that governance level, where does the fiduciary duty fall? How is the company going to change? And we think it needs to go to the board.
Do you feel like the C-suite is getting more sensitive to these demands in terms of ESG factors?
I do. I was on, actually, Intel had their virtual annual meeting, which I'm not a fan of. I think you have an annual meeting at a place and investors are invited, and then you can have it virtually as well. But alone, I don't think it's a great format. But, you know, most of the Q&A portion of the meeting was about sustainability issues, ESG issues, concerns about diversity. We had a proposal going to a vote asking for the company to publish its median gender pay gap as, you know, one of the structural barriers that women aren't holding enough high-paying jobs at the company. And in that, they're not in positions of leadership. And we know that diversity, gender and racial diversity actually improve performance. So that's what we're looking for.
And do you find, just quickly, about 30 seconds here, do you feel like the performances are coming along as a result of this?
I think companies are managing these risks better than they ever have. We certainly have laggards like Facebook and Exxon, but it's catching on.
And you're right. You're right to say that there are risks at the company if not dealt with. Natasha, thank you so much.
Thank you.
Natasha Lamb, of course, she's our Juna Capital Managing Partner joining us here. Still ahead, the importance of sustainable investing. We'll talk a little bit more about this, why Trillium Asset Management says you should look at a company's carbon footprint before investing. That's coming up next, and this is Bloomberg. Welcome back to Bloomberg Technology in Boston. I'm Carol Masser. Well, Matthew Patsky is one of the pioneers when it comes to sustainable and responsible investing, going all the way back to his early days on Wall Street and at Lehman Brothers. Well, today he is CEO and managing partner at Trillium Asset Management based in Boston, and it's a firm that has about $2.8 billion in assets under management. Matt, welcome.
Thank you, Carol. Great to be here.
Well, I said it goes all the way back to your early days back on Wall Street, Lehman Brothers. What was it that you saw that you knew that we had to start kind of incorporating ESG factors into investing?
It was clear to me from early on that there was materiality to environmental, social, and governance factors, and that as I looked at those factors in looking at companies in addition to financial, that I was finding stronger management teams and stronger performance.
Really?
And so I was, and ended up finding a whole bunch of early companies that were adopting operating philosophies that were incorporating these.
Because it's interesting. I think about the early days of, ESG investing, if you will, that I do feel like there wasn't always the performance, but you're saying you did notice a correlation.
The performance was there, but you had to also look for financial performance, right? And so the mistake I think you saw in the earliest iteration of looking at these factors were people saying, I'm going to invest in this company because it has strong environmental, social, and governance, but it didn't have the strongest financial model.
It felt good.
It had to be that all of that was there. And so you didn't just buy the company because, boy, seventh generation looks great, it has great environmental, social governance. It had to have a financial model behind it. And so you had to look through and say, here are the names I'm going to own.
Right.
Starbucks, Whole Foods. Here are the names I'm not going to own.
Right.
Right? And then here are the names that are more going to be a stock I can own during certain periods, Ben & Jerry's. But I'm not going to own all of the good ESG stories all the time.
Right.
Right. That was the mistake I think that was made by early managers who were fund managers adopting environmental, social, and governance as factors.
Do you feel like the definition, I was talking about this with our last guest, Natasha Lamb, in terms of how you define ESG, is it getting cleaner and more, kind of standards?
I would say it's becoming more of a broad-based recognition of the materiality that environmental, social, and environmental, social, and governance data can be used, incorporated into an investment process. I don't think that we are to a point where the data is good enough, but we are seeing steady improvement. And we've gotten to where there are multiple data sets of this that are moving towards standardization, and of course there's a move with SASB towards standardization. So.
I want to ask you about a company like PG&E. So here they are, stock's down about 24%. We've seen some hedge funds buying into it. That kind of makes sense. What's your take on a company like this in terms of the climate change and the risk that utilities face as a result? I mean, are they overvalued because of that?
Well, if we want to see the future of fossil fuel electricity generation, we need to look to Europe, right, which is ahead of us in adopting renewables. And we can look to what happened in Germany, where were not for a government bailout, they would have mostly gone bankrupt. And I would say that most of the utilities in the U.S. have failed to acknowledge what's happening with the change of the importance of the carbon footprint of their companies, and are therefore not adopting fast enough a model to invest toward changing the mix of how they generate electricity. And so we are headed for some real problems beyond, PG&E. We're headed to problems with a number of utilities who are spending their money trying to look at, and I'm going to give you a local Eversource, trying to find political support for an $8 billion extension of pipelines here in the Bay State, rather than focusing in on the changes that are happening in our energy supply and how we are going to need to generate electricity.
So, Matt, is the
Yeah.
headline more bankruptcies to come in terms of public
absolutely.
utilities? No doubt about it.
No doubt about it. It's just a matter of how long.
What about the coal industry? We've done some stories at Bloomberg that they're having trouble finding financing, or when they find financing from banks and investors, it's expensive.
Yeah. Well, that is part of what
part of
happens when an industry goes into secular decline. You know, the industries that are in decline are going to face increased costs and ultimately bankruptcy, right? And so the coal industry, of course, largely in the U.S. has filed for bankruptcy protection.
Right.
You're not likely to see anything improve, regardless of what's happening with the administration's constant argument that they were victims of a war on coal. There was no war on coal. Better technology, better options were being adopted.
Right. And the marketplace is just adopting
And the marketplace is reacting.
Well, speaking of marketplaces changing and reacting, Tesla, has certainly upended the automobile industry. You've been pushing for some governance and some sustainability reports at Tesla. Where are we on that? Are we getting progress? And do you feel comfortable with Elon Musk running this company?
No, in a word. But so we indeed we were looking for, given the high profile of Tesla, we were looking for them to try to be more of a leader in doing sustainability.